What's good, guys? Welcome back to another video. The trade yesterday was an absolute banger, and the good news is that price action is actually looking pretty decent today to potentially repeat another banger. So I'm going to break this all down. I'm going to give you the Bitcoin trade for today and just give you the overall game plan on how to best approach today if your goal is to make money. And speaking about making money, if you're new here, welcome. My name is Shwen. I have been making these videos daily for the past year and a half, and I have been documenting both my wins and losses like publicly. And so far, I'm at about a 78% win rate across 200 plus trades. So if you're new here, just understand one thing. I tend to be right a little bit more than I'm wrong, so you're probably in the right place. But without further ado, let's get into the video. So kicking things off on Bitcoin, we are looking at a bullish daily bias. Now, yesterday was the day where I called for the potential breakout, and I think a lot of the signs were present to, point towards the fact that we were looking at a potential breakout. The exact sign that I asked you guys to look for was a candle close above this level on the 1 hourly chart, retrace back into here, and heading up towards the upside. And the playbook yesterday was super simple. You just targeted for 2R, and I think that would have worked out. Now, some of you may have taken the trade from just directly on the 1 hourly order block over here, in which case you would probably still be stuck. But in terms of today, I think we're going to be looking for something quite similar. There are only really two ways that today's going to play out. But just right before I get into that, real quick heads up. I'm running a $25,000 giveaway right now, and no, it's not one of those like fake giveaways or whatever. Like generally, I'm giving away spots to my flagship coaching program. So if you've always wanted to make a full-time living from trading, or if you just wanted to be consistent with trading, but you may not have had the cash to afford, the program, then feel free to check the link in the description box below, or just simply go onto my X. It's going to be the pinned post, and you'll be able to just take part in the giveaway. We're currently almost 50% full right now, so I'd encourage you to just act quickly because there is only so many applications that we can I can physically read through, so I'm not planning on taking on too many applications. But with that out of the way though, let's get into just what I was talking about from before. Now that we have had a convincing range breakout, and the way that we know this is to do with, just basic auction market theory. Now, if that sounds Chinese to you, don't worry, I'm going to explain it really simply right now. So every time you have a range, there are only two things that can happen, right? The first one is rejection. The second one is acceptance. A rejection is when you go beyond the level, but you fail to close outside of it. Now, I know this is a very simplified explanation of what is, a rejection or acceptance. If you're someone who actually understands volume profiling or you understand auction market theory, just bear with me here. This is mainly for the beginners. If you fail to close outside of the range, well, then clearly you have gotten rejected. Now, yesterday we got a candle close convincingly outside of the range, and so right now I think the market is about to find just basically the breakouts confirmed. And you can also see this in terms of the 1 hourly chart, where we are now forming a new value area, which again, if that sounds Chinese, just we're forming now a new range outside of the previous range high, which shows you that, hey, the market is accepting outside of that range, which also tells you that the correct thing to do at the moment is to look for some sort of a continuation, understanding that, okay, the downtrend may be over, the range may be over, and right now we're looking at a next couple of days or maybe next couple of weeks of just potential, some sort of an uptrend. Now, with that said though, because we're looking for a long, and also this is supported by the fact that yesterday we got a bullish daily bias, like a bullish candle close equal bullish daily bias. That means that we are going to be looking for a long, coupled with the fact that the hourly order flow is already bullish. There are only really two ways that this could potentially play out. The first one is going to be, I want to see a candle close above 61,900. Now, the reason why I want to see this is because today is a non-news day. Just to give you an idea of what I'm talking about, Friday, today, absolutely zero high impact news. And the reason why this matters is because the market always moves for a reason, or at the very least, the biggest moves in the market always have a reason behind it. Now, when there is no news, market participants could just look at the market and be like, yeah, there's not really, I don't really have a reason why I should be looking at the markets today. Like, there's no CPI, there's no non-farm payroll, Trump is not speaking, whatever. The key thing here is that news events, or rather red folder high impact economic news, is a catalyst for volatility. And if you know anything about trading, is that the hardest conditions for traders to make money is when there's zero volatility, because the market is not moving. We don't need the market to only go up in order to make money, because trading, we can actually go short. But the biggest problem is that when the market is not moving at all, we can't go long and we can't go short. Now, the reason why I say this is that we are currently operating in slightly lower probability conditions compared to yesterday and potentially Wednesday, which, by the way, I just wanted to shout out this comment here because it's pretty funny. Like, if you guys were actually following along the trade yesterday, so someone actually dropped a comment saying, like, basically, oh yeah, the daily candle has already pumped a lot, and I am not, I just can't get behind longing range high after a 2% move for the day. But he also trades completely different to me, and that's fine. But then at the end of the day, like Darla actually mentioned, like that daily candle is pretty big already. If you were right on that trade, I think everyone needs to join bootcamp, including myself. And I'm like, time to join bootcamp. But yeah, overall, like you guys don't have to take it from me. I track all of my trades anyways. Like you guys know that the system is overall super profitable. And so this hopefully gives you a good idea as to, differentiating between what is a possible range breakout. And yesterday, that was exactly what I was looking for. Plus, I gave you exact conditions on what to look for to determine a range breakout. Now, the day before, we actually also had that condition, but like unfortunately, we didn't quite get it. And that's why we ended up going for that reversal back to the range highs. So it's not to say that you should avoid ranges altogether. You just got to know what you're looking for. And obviously, if you like to learn the system, first link in the description box below, apply to bootcamp. This stuff works. Like you've seen it from me and you've seen it from all of the wins that I've shared on Twitter. Like we change lives. So overall, the reason why I would be looking for a candle close above this level right here is very similar to what I just described. If some of you were paying attention earlier to when I was talking about ranges and acceptance and rejection, I want you to pay attention here. All right. What does this look like to you? This is a range. What do we want to look for in order to get a continuation towards the upside rather than, potentially going for a fake out and then price actually sweeps down below? That's right. You want to see a candle close outside of the range. Now, obviously range and candle closes or whatever. Like again, if there's anyone that deals with volume profiling here, I know, bear with me, I'm just simplifying it, but the concept, the principle is still remaining the same. If you get a candle close above this level, it's kind of undeniable, like, hey, there is, at the very least, there is an interested kind of like party of people that are interested in keeping price above this level and potentially going for a breakout. But if you don't get that, obviously, if you only get a liquidity sweep, or if you just get a candle kind of like wick through this level, then that shows you this is very likely going to be some sort of a rejection. And also take a look here. Over here, you have a weak high. A weak high is a high that basically does not sweep liquidity. At the moment, with this high right now, you have formed relatively equal highs, which means if you do go for the rejection, you're basically going to be sweeping out relatively equal highs and are heading towards the downside. Not really that far down, but just to the range lows. So this is like range trading 101, basically, for anyone that is new to this entire concept. So yes, I know that we have already gotten an early CISD. Yes, I totally understand that. But when it comes to ranges, you don't want to be operating within the middle of the range. You kind of want to be operating once you get a confirmed breakout, or at the very least, if you are looking for a long, you go for a liquidity sweep, which leads me on to scenario 2 that we should be looking for today, which is over here. That's the range low. If we get a liquidity sweep between the hours of 7 a.m. to 10 a.m. New York, and you start seeing a kind of like failure to accept out of the range, which just basically comes in the form of no hourly candle close beneath this level, then you would be looking for a potential long towards the upside. So two ways, right? Either you get a confirmed breakout, or we will operate from the range lows once it's been swept. And this is basically range trading 101, right? This is the playbook for trading ranges. And the middle is basically where everyone goes to die. If there's like one quote that I can leave you with, that comes from the head coach here at AOC. He loves to say something along the lines of don't diddle in the middle. And that's like, it couldn't be further from the truth. The middle is exactly where like you can kind of make an argument that, oh yeah, you have relatively equal highs above the upside. And at the same time, you also have reason to believe that price could potentially go to the downside. Either way, direction is not clear. And when direction is not clear, that is when you run into the worst trades that you could possibly take. So personally, I'm going to be patient. Again, we don't have news today. And even though the direction overall is pretty clear, like you don't want to just kind of dive right into a trade right here and, potentially get stopped out. Now, if there is anyone here watching that are more aggressive as a trader, you have a higher risk tolerance and you don't really mind losing a trade. If it means that you can kind of take a shot at this, then technically this is already a bullish order block. This is already an early CISD, and a trade here, setting your target at just this recent high over here, would easily give you 2R. So if you see this and you take this, like it's still fine. It's just not the type of trade that I would take for today, for the specific reason that we do not have news today. And if we did have news today, that means the overall kind of like environment that we're operating in is decently high probability. In that case, I'd be more than happy to just try this trade right now because everything's aligned. You have bullish order flow, you have bullish daily bias, like everything's bullish. Purely because of the fact that we are not operating on a news day right now tells me that I want to be more careful or more selective with the trades that I do take. Like being more careful and cautious is a way of adapting or taking into account the market conditions that you're operating in. So being too aggressive on the day where you are not supposed to be aggressive is a mistake. So yeah, again, if you're that type of person, I know some of you are watching this and you're still going to take this trade. Like, don't get me wrong, it's a valid trade. I would prefer more confirmation for the reason that I've already described. And by the way, like this week has been an absolute banger, and I'm going to look to post a couple of more like throughout the weekends. But otherwise, trade safe, and I'll see you guys next week. Oh yeah, also, be Independence Day to any of my American viewers that are watching. I hope you stay safe in the heat wave, especially if you're on the East Coast. But otherwise, see you next week. Ciao, ciao.